Let's welcome in our special management now. The management at Apollo Tubes is now with us. Mr. Deepak Goyal from Apollo Tubes is joining us. Sir, firstly, thank you so much for taking out time for us. IDFC, one of the well-known brokerage house over here, has initiated coverage on the company with a target price of 2731, and that's why we are talking to the management. Sir, their main trigger is that the company will benefit from a 10% CAGR demand growth in India. Tell us more about this. What are these triggers?
Thank you, sir. Thank you for calling us. And first, Q1 is a very eventful quarter for us. We're glad to say that we have the proven resilience even in the difficult times, and we have emerged stronger than ever before in this difficult time. Now we are the future ready in the coming months as before out of this difficult time. Now are the future ready in the coming months where the demand in the economy is recovers over the next 2 to 3 quarters. Now we are worked on the 4-point agenda, which help us in come out the crisis with the proven resilience. First is the lighter balance sheets. We are working over the debt reductions, reduce debtors, reduce inventory days. Second is the lower fixed cost in the overall organizations. And third is the market share gain. Market share gain through the new value-added products and in the existing markets. And third is the return back to the pre-COVID profitability levels. And this year we are targeting at least we achieve over last year's volumes with a better profitability.
Right. You could also, just talk to us about what's happening as far as, volume is concerned. So, of course, Q1 was completely different than what one would have earlier thought because of the sort of lockdowns that have happened, the way, there was a risk aversion all across in various markets. How are things rebounding? Are things back to the pre-COVID level? Would you expect it to further improve as you gain market share? Because, some of the lower players may actually lose out on market share.
Sir, some of the weak competitors are losing the market shares, and secondly, our focus is on the rurals and tier 2, tier 3 cities. So we have very good distribution network is there. And in the COVID periods, in the April or first half of the May, is the labor is reverse migrated to their rural areas. From there, is the demand is very good. So we are quite hopeful that rural area is outperform than the urban areas now. In the urban areas, sales is down in the range of 30 to 40%, but in rural and semi-urban areas, demand is very quickly pick up. So that benefit is come to us, and you are rightly said is the weak competitors because they have the liquidity issues and supply chain sides. They have the some issues that benefit to us.
Okay, Mr. Goyal, talk to us about how you're looking to use government's renewed thrust on infrastructure space. What is the growth and opportunity does it throw open for you going forward? And is this also an opportunity for you to expand your pan-India presence or expand your market share as well from current levels?
Yeah, we have right now we have a capacity of 2.5 million tons in a years, and currently we are using 0.6. We have the enough capacity. If the infrastructure demand is come out, we are easily meet out. And secondly, I mentioned to that we are the largest largest structural tubing manufacturer in India, and our size range is very vast, from half inches to 300 by 300. So it's a very good opportunity would be for the company if infrastructure demand is come out. And we easily grab this if the infrastructure demands from the government projects or infrastructure spending is come.
That's heartening to know. What about the premium products and offerings that you have? Do you see that expanding and thereby aiding your margins do better going forward? What is the outlook there?
Regularly, we are focusing on lower cost and increasing the efficiency and increasing the volume of the value-added product like Apollo Signature, Apollo Chocolates, Apollo Elegants, and other galvanized products. So we are seeing a very good demands from of these products, and we are quite hopeful that margins will improve in the next 2 to 3 quarters.
Well, you could also, just tell us what will be your outlook. Say this year definitely is not going to be a normal year for any company. But what should be your outlook for 22? Once, you gain market share, the things that you were pointing out earlier, once those start to play out, what will be a sustainable growth rate that you would be looking at?
Double-digit growth is a sustainable growth for the company. If you can see the last 10 years, last 5 years, last 3 years, or last 1 year, our growth is higher double-digit growth is there in the APL Apollo, and CAGR of the last 10 years is more than 20%. We are aiming the same for the coming years also. And we have the enough capacity for taking the growth of 20% in the next 2 to 3 years. After that, we ready for the further capex if this year is normalize the situations, and so we will further capex for the grabbing the market.
Thank you so much, sir, for taking out time for us. Always good to get perspective from you. On that note, we are taking a break, coming back quickly, leaving you with markets continue to look strong, and especially the mid-cap side of the market, which continues to outperform.